Hello everyone, welcome to the ichimokocharts.com daily analysis for the Euro-US dollar FX for Wednesday, February the 29th, 2012. Well, a very large black-bodied candle today, and we can see from the previous day's trading, or the previous 2 days trading, we had in bar chart terms 2 inside days, and that did raise some doubt about continuation of the trend to the upside, which previously was a first time frame uptrend because the previous candles made a higher high and a higher low. Today's trading we have an outside day, and that is a day where the buyers were strong enough to take out the previous high, but the sellers were strong enough to take out the previous low. Now we do have a very large black bodied candle, and that does represent the sellers making very solid net bearish progress in the day between the open and the close. And the sellers have closed this market with control, and throughout the trading day they've shown very strong commitment to taking this market lower. So a lot of downside momentum from the sellers in this market for today's trading. The sellers did, however, fail to penetrate and close below the 133.20 level. They did just touch below there, but didn't trade through there substantially. And the failure to close beyond there in a significant way might be quite important for this market, especially for the next day's trading. Technically, we do still have the market in an uptrend because we've had an outside day and 2 inside days prior to that. So if we do see the market have enough downside momentum to take out the 133.20 level of support, which was previous resistance, we could see the market establish a lower high and a lower low and a change of trend to the downside. Now, this is also a very important level of support because we have the Tenkan-sen trading around that level, which is at 133.29 at the moment. So that makes that a very important level as well. Down below there we do have potentially strong support around the Kijun-sen, which is at 132.97, and the top of the cloud is roughly around that area as well, around 132.16, and it also coincides with this swing high and this zone of strong price rejection around the 131.96, 132.37 area, so very strong support down below. If we do see this market find support at the 133.20 level, then we could see the market trade back up to around the 134.80, 134.90 region where we saw this downside price rejection previously. Now this market is set up for a potential Japanese candlestick reversal pattern, and it is a tweezers top, and a tweezers top is where you have either 2 candles that are adjacent, or you can have a couple of candles in between where you have the highs of those candles up around the same area roughly, and these 2 candles are pretty much at the same level at the high. So technically, even though we don't have a change of trend, there is very strong potential for that change to come to fruition. Here we have the prior uptrend, and that's very important when we're looking at the reversals, so you do need the prior uptrend. Now in terms of Ichimoku, the market remains bullish in the long-term time frame. We had the very strong bullish breakout previously here, which was a bullish signal in Ichimoku charts terms, and the market's bullish in the medium-term time frame by trading up above the Kijun-sen, and the market is trading above the Tenkan-sen as well, only just. That's ignoring the candle that's developing at the moment. So bullish in all 3 time frames, and the Chica span here is above the corresponding price action, confirming the bullishness that we're seeing in the market, although as I've mentioned quite often previously, it is trading within the cloud, and some Ichimoku practitioners also look at where the Chica span is trading in relation to the cloud, though I tend to think it should be we should be placing more emphasis on the position of it relative to the corresponding price action. So there is very strong potential for the market to bounce off this level. Already we're seeing a white-bodied candle forming, a bullish candle. So this 133.20 level is very important and very strong because of the confluence of the support there with the Tenkan-sen and the major swing high. So let's see how the market reacts here. We could see the market retrace part of this very large black-bodied candle and test up to around the 134.80 for 134.90 level. Next, moving to the Aussie dollar US dollar FX, and here we see a black body candle. So a change of momentum in this market. The black body tells us that the sellers have made net bearish progress, and that's following the spinning top type candle as the market tested up to the trend line that we'd drawn here from previous week or so. Spinning top type candles, as we saw in the previous day's trading, are candles of indecision, and that did set the market up for a potential change of trend, but we haven't seen that change of trend at the moment. The trend remains up. That previous candle was a candle that made a higher high and a higher low. Now, interestingly, with today's candle, we did see enough momentum from the buyers during the trading day to test up above the high of the previous candle, above the trend line, above the resistance at 108 and above the resistance at 108.43, but they failed to maintain that commitment. They lost commitment as they were trading up around those areas. So each of those areas of resistance has held and held quite strongly, and it makes them even more significant if the market is going to trade to higher levels. The sellers were strong enough to take control of this market for the trading day as well, and we can see that the market closed down towards the low of the current candle, and that does show us that the sellers took control of the market throughout the trading day and showed some commitment taking the market lower. In terms of the pattern that we highlighted previously, we have a potential flag pattern that still hasn't been fulfilled yet. Here we have the prior uptrend. Here we have the two lines drawing the boundary of the flag, with the breakout after today's trading, but a failure to close up above that, the boundary of the pattern. Completion of that pattern would be a breakout up above. So this does muddy that pattern a little bit, and the boundaries now have been taken out. So whether the pattern now remains valid or not remains to be seen. Some people may still wait for a potential close up above there. We could perhaps draw another boundary up through the initial high of the pattern and the current high that we have here. That would make this look like some sort of a broadening top formation perhaps, although it doesn't strictly conform to that type of pattern, because we would need to see the market making a higher high in this region and then a higher high here, so not quite a megaphone or broadening top pattern, but the ramifications of that are quite important, and it does signify a very volatile congestion area in the market. So here we have the market selling off to find support down at this level, testing up to this level, the sellers gaining downside momentum by taking out the previous trough, but the buyers for today's trading having the momentum to test outside of the previous high of the pattern and then selling off. So a very volatile a few weeks of trading within this market, and quite often that can be a sign of a major top in a market. But what we would need to see is the market close in a significantly weak manner down below the swing lows of the pattern around here, around the lower boundaries. Each of the times that the market has tested down around the lows of these boundaries, we have seen the shadows on the bottom of the candles representing the sellers losing commitment down there. And the same for the upper boundary. We're testing above the upper boundary and the buyers are losing commitment. So we have this great volatile battle going on at the top of this trend. And this will probably be resolved when we see